This edition of Farming the Countryside is brought to you by Corteva Agriscience Range and Pasture. Your land, your herd, our commitment. Learn more at rangeandpasture.com/countryside. Here's a look at some of the work we've been doing with Corteva Pasture and Range on our farm.
Well, spring of 2026 here, I think our plan is look at the Ultigraze in a couple of places where we need to do that just because we need the fertility, but we also need the weed control in some hard to get to places. But then we'll prioritize pastures that didn't get treated with NovaGraze or Adoricor last year, just knowing those will probably be problem spots. Evaluate what we did use NovaGraze with last year and see if we have enough annual Espadiza that helps with weed control, or if we need to go in and spray there again to help continue to promote that Espadiza and hopefully even some white clover.
White clover is really nice to introduce into these cool season grass pastures. It is very tolerant to lower soil pHs, to poor fertility, and so they're a little more forgiving than a lot of other legumes. But having white clover in there also is going to help you out with your nutritional needs for your cattle.
To see more from our farm and others, just go to rangeandpasture.com/countryside.
Hi, I'm Andrew McCrae. Welcome to our farm and ranch in northwest Missouri. My great-great-grandfather settled here in 1910, and I'm the fifth generation to grow crops and livestock here. As a farmer myself, I know the highs and lows of this life, the issues we confront every day, some new, some as old as farming itself. This show is a place to talk with farmers and others in the ag industry about topics that mean something to us, topics that can improve the present and future of our operations. This is Farming the Countryside.
John Nalivka with Sterling Marketing joins me here on Farming the Countryside. John, I appreciate you taking time to visit. And for those that aren't familiar with Sterling Marketing, a little of your background, you might want to fill them in, because you've certainly been around beef and the meat market for a long time.
Yeah, I started doing market and commodity analysis and advisory, and I started doing the market analysis back in '84. I worked for USDA in Washington, D.C. for 3 years. I was a cattle and beef analyst, economist. And then when I left there, I went to Oregon State University and for a couple of years, and then went to work for Bill Helming. Called me one day and said he needed a new looking for a director of research, and wanted to know if I wanted to come out and talk to him. Bill and I, we had somewhat of a connection. We both have our graduate degrees from the University of Nevada, although his was quite a few years before mine. But anyway, so I worked for Helming as a director of research, and then we started another gentleman at the Helming Group. He and I started Sterling Marketing at the end of 1990, and well, actually, we left and basically took it over in January '91. So, and then I bought Ron's share of the company in '94, and we moved to Eastern Oregon, out here to the high desert. So.
Yeah, and you're advising folks then, all the time, and I guess that's where I wanted to go, mostly focusing on the beef market on this show. And as we speak now, we are a few days in the rearview mirror of the last cattle on feed report. I guess we would consider it probably negative to the market. What did you take away from that cattle on feed report? Not only as a snapshot of now, but maybe where we're headed for the future as far as how we're building up our inventory and so forth.
Well, if you look at the numbers, Andrew, my takeaway on was that we placed cattle in the cattle that were being backgrounded at the beginning of the year. We probably placed in the feedlot a little earlier in April. But I think the one thing is that if you look at the numbers, and the actual on feed number on May 1, we're about 10% higher than we were in 2014, and about 9% higher than we were in 2015. And I go back to 2014 and 15 because that's about where we were at the inventory, not, fairly similar to where we're at today. I think that, and you look at we continue to look at the heifer slaughter, of course, because everybody's interested in where we're going with the inventory. I think that's, to me, those are heifers that did not get bred and become replacements, but a lot of those cattle were heifers that were in a backgrounding program that went in the feedlot. So I think it tells a lot about where we're heading, and we're not building the herd. And there's drought and fires, and we've got a little bit of everything. The only thing that's that's very, very positive on the that would be, with regard to herd building is the market and margins, cow-calf margins. But there's still a lot of there's the negative part of the fires and the drought and areas, but there's also, I think, a lot of guys that are just saying, this is my chance to really get squared away. Why would I retain heifers with the opportunity cost that they have today of $2,500? That's only the beginning. That's before you put any money into them to breed them.
Right.
So,
well, that's something I wanted to ask. As you look at cattle cycles, I think people have been predicting that we would be building back the herd a lot sooner than what we have. So, and you mentioned some of the reasons. Is some of it drought? Is it some of it just because people say, I'm not going to invest? This seems to me a little unusual as cattle cycles go, that we have been this long. But what do you see looking historically and then comparing it to today?
Well, I think two things. First of all, I think people are just very happy to retire debt, get financially sound with the market that we have today. And again, to retain a heifer, that's the opportunity cost of retaining that heifer is $2,500. She could get on a truck and go, and be sold. That's $2,500 plus then another $1,000 to breed her before you even have a calf. So you've got a pretty high cost, and that's 2 years down the road. We're all positive. I mean, I'm positive about 2 years down the road, but a lot can happen. And, here you sit with a pretty high cost heifer. And although there was some sold here in Eastern Oregon, bred heifers for $6,000 here a couple of weeks ago. So I would not want to be the owner of those, but at any rate, I'm sure they were very, very quality cattle. But the other thing is, guys are focusing on. I was on a task force here put together by the Red Angus Association here a couple of years ago, and we looked at, what can we do towards gearing towards, really marketing value as opposed to just marketing head of cattle. And the question arose because of, should black-hided cattle be worth more than red-hided cattle? Well, you can have the same quality carcass with anything, but Black Angus have definitely led the way. There's no doubt about it, CAB. But our focus for 4 meetings over 2 years was to really look at, getting people to market and think about value, genetics, and what they're doing with their cow herd. And if you're marketing value, you potentially make a lot more money than marketing numbers head of cattle. And so I think that we had an impact. I think that people are really focused on that and knowing that they can do that well. So that's part of the deal. You don't need the numbers. You need the quality and so I think we're there. And then the other thing too is I think basically we grow the herd with small herds of 25 to 50 head, and that's a lot of guys out in your part of the country, Andrew. And I think those people are not nearly as ambitious about owning cows today as they were 10 years ago. I think there's just a lot of things changed on the psychology of the market.
So with those things changing, then do you see this build back coming still, or have things fundamentally changed?
I think we'll probably end up with a very, we'll have a build back, but it's going to be very slow and it'll be very minor. And I don't think it's going to be you look back at previous cattle cycles, and as soon as prices, and I'll go back and use 2013, 14 as an example again, as soon as those prices went up and became a record high, everybody, I got to own cattle. and they had the pasture or the range ground, whatever it was. These big herds out here where I live, they don't change the size of them very much. I mean, if a guy's running 500 cows, he runs 500 cows. And a lot of that is dictated by the, federal lands and public, federal grazing and BLM and Forest Service. But at the same time, I think that whole situation has just changed. And again, there'll be some, herd building, but it probably won't amount to much. The third thing I didn't mention on this too is if you look at, and I've shown this chart quite a bit, but you look at the production efficiency of this cattle herd, you look at production efficiency across all of U.S. agriculture, and you don't have to increase the herd size very much before the quantity of beef increases significantly more. And even with farm ground, you planted acreage and in yields, acre yields, corn yield per acre has increased over time. And I think that's always been part of the problem. And it's a problem for the market in U.S. agriculture. It's not a problem from the standpoint. I'm glad to see that we have that kind of efficiency. But and anytime when we go, so it shows when we've gone back and built the herd, we never come back to the previous peak in cattle numbers. So here we are sitting around. I think we're going to hover around this 80 million, and of course, one of the drivers on the market today is global markets and trade. And, we talk about, we've got the lowest cattle numbers in 71 years. And we need, prices are record high, prices are record high because people like beef and they want to buy it,
You mentioned the global markets there, and you have written a bit about the China, I guess we'll put in quotes, deal or no deal, or if it really makes much impact. Your thoughts on that? Because it was certainly in the news quite a bit, making headlines a couple of weeks ago, I think now.
Well, I think it's always, I think it's good that we're back to kind of square one, and access is always the first issue, and then it's just how much you'll sell. I think that, obviously we need China as a partner to buy beef from the United States, but on the other hand too, you look at where we're at with the cost today. It's pretty pricey, and China's been buying quite a bit of beef from beyond quite a bit, as they've been buying a lot of beef from Brazil, and so it's I'm positive about it. I felt like after I wrote that article, maybe everybody think, well, you're really negative, Malifka. Well, I'm not negative about it. I think it's a slow go to get back and get going in that market. We build other markets in Asia too. So, I mean, it's not like it's, China's not our only customer. We've got others as well. And I think we need to kind of always, look at everybody who's a potential, as U.S. customer for U.S. beef.
The other country that gets in the news quite a bit when it comes to beef is Argentina, and how much of their beef we will bring into this country. Yeah. We hear a lot, but is that making that big a difference with the numbers that we're talking about?
No, and we've got our biggest import or sources of beef, have always over the years have always been Australia and New Zealand. And then over the last few years, we brought in Uruguay and Argentina and Brazil. Of course, Brazil is our largest source of imported beef, and they bring in it's all under the tariff rate quota, but they have there's 64,000 tons that is the piece that they bring beef under, and after they hit that, and they filled that by last this year, it's always by the end of January. And so they bring it in, they pay a 26% tariff on that, on anything over the 64,000 tons. And then they also pay, they got to go in the freezer with it, go into bonds. So they're paying that cost. So you have to have a market, you have to have a fresh beef market like we've got here. The other thing that's very important and key to imported or U.S. beef imports, that is grinding beef, and we import to, accommodate our demand for ground beef. And when we're in a situation where our cow slaughter is down as much as it is today, and that's the source of lean trim, then we bring in imported beef to supplement that and accommodate it. And so we're not bringing in cuts. Well, there's some, but I mean it's such a small portion. But largely from South America and Australia and New Zealand, that is beef cuts, or grinding beef. I mean, we also import from Canada as well. So
we hear a lot of talk, and I'm not asking this necessarily as a political statement, but just curious your thoughts on the administration and a focus on high beef prices and wanting to do something about that. Should the administration be working on it? I don't see the consumer demand backing up much, even though the prices are higher. So is it more just we want to talk about high prices, but it's not going to change much? What's your thoughts on all this?
It comes under two words: affordability and politics. And I don't want the government really in any part of U.S. agriculture, but that's my opinion, and that's somewhat political. But it's probably a lot political. But I didn't like it when the president came out and made the comment when beef prices are too high. So somebody talked to him, I'm sure, and this could be a good issue, and he went after it, and that's all gone by the wayside now, and the talk is gone, and we're not going to import beef to lower beef prices. I don't know if I wrote another article when that came out, and I said, well, there's a very simple way to lower beef prices: just cut off demand, tell people to quit eating beef, price will go down, But I think that the one thing that when the comment came out from the administration, and I thought, here we are, and U.S. cattle ranchers are now in a position to be profitable, and for probably a fairly long time, longer than they have in previous periods anyway. And let's just leave that alone and let them be profitable. And as long as people are demanding beef, and they like they like beef, it's high quality. That's why the price is them, and they'll move down the meat case if they look at a ribeye steak and it's $15 to $20 a pound, they'll go look right next to it, and there's ground beef for $6 a pound. And and it's interesting because people are really not going all the way, well, to the extent they used to anyway, to buy pork and chicken, on beef prices. So
yeah, I wanted to ask you about that. Are you surprised at all, and maybe surprised is not the right word, that we have seen demand hold in there, not only for beef, but for some of those top cuts? People are still buying the product, it looks like.
Well, you can go into some of the restaurants that serve high-end restaurants that are serving steaks, and there's not an empty seat in the house, and the steak is costing $50 a pound, or $50 for a meal, and you have to get a good example is, I don't know if I can say it on the air, but Ruth's Chris. You go in there, and you have to get a reservation 2 weeks ahead. So somebody is not having a problem. I mean, and that's not everybody, because there's certainly it's a little bit unfair to say everybody's eating $50 steak, because that's not the case. But certainly, you can also go into other steakhouses, family style steakhouses, and they're also full. I mean, there's not an empty seat in the house. So I think that it's just a matter. People like beef. They like U.S. beef, and that's where we're at. I think one thing is that when I've heard people comment about this, price of food, I think we've had Americans are somewhat spoiled over low cost food. I mean, we've had this cheap food policy for 100 years, and it's got people somewhat spoiled. We not only have a large, a large supply of food, generally speaking, it's quality, it's safe, and I think you look anywhere else in the world, and you wouldn't have the same confidence on the food as we do on our food supply, and particularly beef, U.S. beef. You know.
John, in the time we've got left here, cattlemen had a pretty profitable year, most of them last year. What do you see this year? We opened up talking about the cattle on feed report, and perhaps that's going to cut into margins coming up now. But do you still see this year as a good year for cattle producers going forward?
Yeah, I think so. I think the one thing that concerns me, and it always does, we get to the point is particularly where we're with these break evens in the feedlot because of the cost of these feeder cattle, and so I think that needs to be. And these guys are managing, obviously they're managing them quite well, and I think as we look to the end of the year, the cattle that are being placed right now will have certainly have break evens that are bumping we're at least at 250, if not up to 260 on some cattle. And I think it's just a matter of, when you have record, I've said this to several groups here this year, just because you have record prices, that doesn't reduce the risk. You actually have greater risk with record high prices from the standpoint of managing your costs and your break evens coming out of the feedlot. And we all saw what happened in 2015 in November at that time were high break evens, and the market crashed around our ears. And so and losses in the feedlot went to, negative $600-700 a head. I don't think that's going to happen this time, but we've got this issue of we've got a lot of capacity to slaughter and process cattle, excess capacity. We also have a lot of capacity to feed cattle in this country. And I think you got to get to the point where you've got to manage this capacity. And I think we'll see some consolidation of capacity as a result. And, we already saw, when you close the border to Mexican, feeder cattle coming out of Mexico, well, that's only 1.2 million head, which isn't a lot in the bigger scheme of things of our overall feeder cattle supply. But to a feedlot in South Texas, that is pretty meaningful. And even Lubbock feeders, which is not in South Texas, and they shut down. So I think it creates some issues. But I see as, again, if the risk is managed and break evens in his feedlots, I think that we can maintain a strong market with pretty significant returns. One thing, Andrew, with regard to the feedlots, I went back, but this week our feeding margin our cattle coming out of the feedlot this week could be the margins my estimate is 228, and the same week a year ago was 684. So that tells you something, that it's pretty. We've seen this pressure on feeding margins with these break evens. So.
Did the 684 just make us believe that it should be 684 all the time? We enjoyed that quite a bit, but maybe our goals are out of adjustment now after we lived through last year.
We tend to have a little short-term thinking in U.S. agriculture. When the margin today is the margin for now and forever, and that could be somewhat wishful thinking. But
right. Well, why don't I wind up with this? I know we can do a whole show on this, but at these levels, does the managing risk that you're talking about look different than it has in the past as far as how I'm going to manage it, or is it using the same tools, but I'm just using them at a different value now?
Well, I think we've got other tools in our tool belt too, with LRP and whatnot. And I think I think there's a lot of ranchers that have got into that from the feedlot perspective. I think to me, it's somewhat difficult because you look at the board today in the futures, live cattle futures, and I sometimes just shake my head and think, well, how could we be there with the futures market and the fundamentals are driving the cash market significantly higher, you know. And I think that what that, to me anyway, and I'm not an expert in that area and don't pretend to be, but you know, I think it causes, or people take another look at it and say, maybe I have to manage this using that tool. Maybe I have to get a little more creative than just a straight hedge. And there's, you know, and also the other thing that we've added to this is these formula pricing, these cattle out of the feedlot. That's a real positive step forward and another way to manage risk. And I think there's feedlots that are certainly have access to the formulas from the packer that they're selling to, and they're buying the feeder cattle accordingly, and really kind of looking from, you know, start to finish. I'm a major advocate, and I have been for several years, of really linking all the pieces in the supply chain and all these markets, and thinking about if I raise a cow, if I have a cow that raises a calf that's going to produce a quality carcass, I can generally know the value, and I need to push that forward. And that's one way to manage the risk for everybody in the supply chain. You know,
John, I appreciate the time. And for those that are looking to find you, Sterling Marketing, the best way to find you online?
Yeah. Well, I can. Well, my email is jnalivka. It's online on the Drover site with everything. All my contact information is with the Profit Tracker.
All right. Great. Well, I appreciate the time.
Yeah. Thank you. Appreciate visiting with you.
This edition of Farming the Countryside has been brought to you by Corteva Agriscience Range and Pasture. Your land, your herd, our commitment. Learn more at rangeandpasture.com/countryside.